Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick, Joel Elconin will be with us if and when he can get his internet worked out. But the show must go on nonetheless. What are we going to talk about today? We're going to talk about why the dip works again. We're going to talk a little bit of GameStop. We'll talk some Bitcoin. We'll talk CCIV. We will talk poultry stocks for the first time in I don't even know how long. Sanderson Farm is reportedly up for sale. We'll take questions from our chat, and I'm very excited for our guest here today, Dave Lauer, old friend of the program and longtime friend of Dennis. Has not been on our show for quite some time, and he is the CEO of Urvin AI. You may have seen him on CNBC, on Reddit. He is a former trader at Citadel, and he's going to come on and talk to us about the entire thing, the AMC, the payment for order flow, the naked short selling, the entire thing that has been dominating this market this year. Very excited for that at 8:35. In the meantime, go ahead and drop us a like if you can. We'd appreciate that. And since Joel's not here, I will just tell you guys, we are up pretty much across the board in stocks. Bitcoin is still down. Crypto, Ethereum is still down. Gold is flat. But the S&Ps are back up. It's almost like yesterday it didn't even matter, right? The S&Ps, the NASDAQ, the Russell is flat. But, you know, we're back up in stocks. It's buy the dip, Dennis.
Buy the dip works again. Buy the dip works overnight. Buy the dip works yesterday. Buy the dip. I mean, we're 1% from all-time highs. I guess has always worked in the SPY because we're up near all-time highs. So sometimes those dips last longer than you like, but overall, buy the dip, probably the best strategy in the history of the markets.
Yeah, it's only, if Joe were here, he would. That's what he said yesterday. Is like yesterday just didn't matter, or the day before, Friday didn't matter.
We quickly forget it's the market that is so forgiving, and it continues to forgive. Yeah, okay, we're gonna worry that maybe the Fed's gonna start to not spike the Kool-Aid as much as they were spiking it before. We won't worry about that. Let's just buy the dip anyways. TLT explosion. And then the implosion a little bit yesterday, helping the bank stocks 2 days ago, or actually helping the bank stocks yesterday because it moves opposite. But this is the market that, like we said, it forgets quickly, and it's hard to get bearish. Even when we're pulling back, you're like, well, we're setting up. You know, we look like we could sell off. But you cannot break that mentality that if I buy the dip, I'm going to make money. And as soon as there's a dip of 1-2%, people are flocking back into SPY. They're flocking back into stocks. You know, we have had prolonged sell-offs in certain sectors, but SPY overall has struggled. And, you know, with the biggest dip that we've had since the COVID crisis back in March of 2020, I believe was only 9%. So we've had, you know, but pretty much straight up since March 2020. And that just continues. It's hard to be a bear.
Yeah, I mean, if I recall, we were feeling pretty bearish, dare I say. It was around here, probably around here too.
Yeah.
Maybe here.
I was bearish. I was bearish the entire month of April and May. I was like, I don't think we're past this. And you know what? Then I had to realize in June, I was like, maybe we're past this. And I was trying to regroup and rebuy stocks. And that's what you've got to do at a certain point in time. You know, cash is nice when it's going down, but cash has been very difficult to be in, you know, not just from an inflation perspective, but just from missing out. And that's the fear out there. It's the fear of missing out, and that does not go away. And I don't know what breaks that mentality. We got a little bit of fear in the crypto market. So that fear of missing out has turned into just fear in the crypto markets. But don't write it off. I mean, I'm still holding a little bit of Ethereum, a slight little bit of Bitcoin, nothing else. I never bought any of the other ones. I know we've had Dogecoin down. Somebody was saying it was down 69% or something. Everybody thought that was funny from the highs. Obviously, Saturday Night Live topping event, but 30,000 is big. We're right there on Bitcoin. It could take it out here today. Let's see what it does there. Support is support until it's broken. It is a triple bottom there, so that's hard support, and it's trying to hold. I tend to think it's going to take it out, like I said yesterday, because you usually don't have those triple bottoms. Usually it's one shot, you bounce, two shots, and then the third one's a charm, and they usually take it out. But it's, anything can happen in these markets. I don't think the Bitcoin story is completely over, but it's definitely spooking a few people now.
Yeah, and then of course, every time there's a big dip on Bitcoin, like yesterday, it's just a steady parade, whether it's Michael Saylor or whoever saying, "Oh, everything is fine, everything is fine, everything is fine. This is normal." I've got Bitcoin that I have no intention of selling, so
I threw some in the long-term investment account.
Yeah.
Same thing.
Yeah.
Just trying to forget that I own it, even though I sold half. I sold half. And I said I'm forever playing with the house's money. Now it's come back down. I originally bought it 17,000. I was like, why didn't I sell it all? I should have sold it all, but I'm still holding half.
I don't remember, as if I need to, but I don't remember the reason. Whatever that I don't want to call it a flash crash, or I don't know if you'd call it that in May. They had that one overnight. That it was over that weekend, right, in mid-May, and we're, like you said, Dennis, we're right there. We are right there, and this is
that 30,000. Look at those levels. Like that is the level of all levels. It's an ugly head and shoulders pattern. So if you take out that neckline here, I mean, we look like we're heading back towards where I bought it around the 17,000 area. That's when we had the big move back and after Thanksgiving, I think it was.
Yeah. Well,
it's not a pretty chart, but patterns, we're always pointing out every head and shoulders pattern doesn't always resolve itself to the downside either.
Yeah, but what about every single, because we always talk about the only way to trade this is technically, what about all the technicians out there?
There's a lot looking at that head and shoulders.
And what if it does break below 30? Then you got every technician under the sun is saying, sell this baby, right? So regardless of whether of the Bitcoin thesis or whatever you think about it, you get people trading it from the short side because they see it just broke a key level. So,
or they're just selling out, or people who just don't want to hold through that because they think it's going to break a key level. There's a lot of people leaning on that level.
Yeah.
So watch for the Gil Morales cut through and rally trick too, where sometimes you cut through and everybody gets bearish and everybody sells, and you get that we'll drop like 28,000. We get back up over 30,000. It could be a false breakdown too, and Gil Morales has, that talks about that cut when he comes on the show, the cut through, come back down and then you start to rally. That trade works a lot of times too. So, I mean, technical analysis is one of the tools that you got to use for crypto because it's difficult from a fundamental basis. But again, it's only one tool in the toolbox.
Yeah. All right, let's move on to this. Oh, and I should mention, since you mentioned the Fed, Jerome Powell is due to speak, testify in front of Congress today at, I think, 2:00 Eastern. So have that on your radar. Let's talk. Where should we go? You want to go CCIV? You want to go GameStop? Where should
Let's start GameStop. We'll get the meme stocks out of the way. I don't know if you can call it. I guess it's a meme stock. I guess it's the meme stock. It's the meme stock that started all meme stocks.
Yep. So the news this morning that they've completed their at-the-market stock offering. So congratulations to GameStop for raising some money. The exact numbers. Let me get the exact numbers for you right here. They raised $1.26 billion in their at-the-market offering program, and the stock is up big on that headline. Dennis, you and I were talking earlier. Historically, this is the kind of headline that would be a nothing burger for a stock. This would not. That's not to say this is bad news. It's not, but it's not.
It's typically no news.
It's no news, right? This kind of a headline would already be priced in because you assume, when you announce an offering, then eventually it's gonna be done, right? The market just looks past it. So it is just wild how every single one of these headlines can be interpreted by the masses. Oh, it's great news. They're
done selling, so now it has to go up.
Right.
That's what they're thinking.
It's just wild,
8%. It's up 8% on this. Wow. I mean, this is GameStop. The stock can go anywhere.
James is asking why these headlines matter. Historically, they don't.
They don't.
But
they do hear if somebody on Reddit or somebody in social media is pounding the table and saying, now they're done selling. The offering's over. Now we can go to the moon. I don't know. Are they taking GameStop to the moon too? I know they're taking AMC there. Is there enough room for GameStop on the moon as well? Is there anybody that say GameStop to the moon, or is it just AMC going to the moon?
No, GameStop was the original mooner.
Oh, it was. Oh, okay.
Yeah.
So they already took GameStop to the moon. Now they're trying to take AMC there as well.
I don't know if it quite got to the moon. It got into orbit for sure.
Got into orbit.
For sure. You know what? I think it got, you know how like Bezos isn't like going to like space. He's going to like the outer atmosphere. That's
what GameStop does.
He's going like 60 miles outside the atmosphere. That's where GameStop got. It get, like the edge of space, and then it came back down. So maybe GameStop needs to hop on the Blue Origin.
Most unpredictable stock.
Yeah.
Sometimes you get some setups, and there's been some setups when it was breaking out through 200 in late May. It's like, okay, it's starting to open up here, and this can actually go again. But you're in the middle of nowhere here. This is the curveball of all curveballs. I don't even try to trade this most of the time because it's difficult and unpredictable. And if you're using any type of risk management, you're getting stopped out usually because this thing just trades with a wild range. You think, okay, yeah, I'm going to lean on this level, and now you're stopped out. So if you're not using risk management techniques, maybe you don't get stopped out nearly as much, but I don't want to get caught holding the bag because I don't have fundamentals to lean on. A lot of times, my longer term investment portfolio is like, I don't mind owning this, I don't mind taking some heat here because I like the company, I like the fundamentals, I like the valuation. You can't lean on that in the GameStop story, so you're just leaning on technicals and you're leaning on story, and the story cools off, you could get stuck. So I kind of just don't trade this thing at all.
Notice the decline in volume, right? I mean, it's been on a slow and steady march lower pretty much since March. So, interesting. Maybe people are...
For that reason, I would say this is probably more of an opportunity to lighten up. But again, I've seen this stock do so many crazy things that I just don't even want to swing at that pitch.
Fair enough.
AMC with a rough day. We might as well talk it too. We're talking the meme stocks. And rough day yesterday, pulled back significantly, got a few people caught from the day before and a couple days before. Everybody thought it was going back to the 70. Did not make a new high on the last move. That is concerning from a technical perspective. I'd say massive resistance now up at 60. It's going to take some work. I just don't see this thing just blasting off to 75 now, because now you got people caught, people who may be buying 60 on the breakout, because not everybody, believe me, is hodling this thing. There's a lot of people who, are still trading this thing. And yesterday it looked like, okay, well, maybe early in the morning we're getting some life. We're looking good. We're up at 62, 63. And then they pulled the rug out from under it, and it basically went straight down $10. So you got some traders, short-term traders caught in this thing now too, hoping to get their money back. I think you got massive resistance up to 58, 59. This one's an easier one to call technically. I think this thing's going to see 50, and I think you could see it soon.
But also, if I can play the other side of that argument here, is everyone was like, oh, no, AMC, oh, it's down 5%. Oh, God. It was back where it was on Thursday, right?
Yeah.
It's
in a range.
Take a chill.
It's in a range. I'm not in love with that chart, though. So you got the classic move, and then you get the move up, and when you don't make a new high on the next move, which maybe we're still going to do that, but we've been struggling up there a few times here now, there's overhead supply here now. And we talk about overhead supply, and that is going to come into play here. It's not smooth sailing. First time up here, there's no overhead supply. Shorts are getting squeezed. Now shorts are saying, I can lean on this 60, 62 area a little bit. So they're leaning on it. I think it's got some massive resistance up at 60 now. So I don't think it's as easy sailing as it was maybe, that it looked to be a week ago.
If you can't handle 5% decline and you're holding this thing, then get out of the kitchen is all I can say, because that's a nothing burger for what this can do.
And you've got to be aware of that. And if you're holding this thing, and maybe there's people are going to hold it forever, but again, you look at it, $28 billion market cap, and you don't have the fundamentals to lean on. I mean, what did we say in the peak when we were looking up the market cap of AMC? In the peak, when you go back to 4 or 5 or 6 years ago, when the movie theater had its previous all-time high, what was the market cap? Like $5 billion, $6 billion?
Yeah, so I think
we looked it up, but
I think it was like 10. It was like 10.
I don't even know if it got to 10. So you're talking a company that's trading for 3 times more than it was when movie theaters were at their peak. So 3 or 4 times more, maybe even more than that. We got to grab what that old market cap was, but it's difficult. There's, the fundamentals here aren't there either, but there's a story here. There's a movement. That means anything can happen. That means I'm not shorting the stock, but I definitely don't want to be long at this point.
All right. Before I forget, a happy birthday to Nick Malucci. in chat.
Ooh, happy birthday, Nick.
Let's move on. Let's move away from that. Let's go to
waiting for meme land. Let's go to Lucid land.
Okay, borderline meme sometimes as well, but
we can't get away from these memes.
What? The CEO was on CNBC. Is that
about 45 minutes ago. CEO on CNBC with Andrew Ross Sorkin. Interesting interview. Very confident CEO. Made some very bold claims, saying that Lucid Technologies will be right up there with Tesla as the leader in EV. And he went as far to say that it's so great for America that you've got Tesla and Lucid, two American companies going to lead the EV charge. And I'm like thinking, there's a lot of other EV players here. And Andrew Ross Sorkin right away came back with him when he said that. What about General Motors? And he went as far to say, well, we'll see if General Motors can do what they say what they think they can do. I'm like, wow, man. You know what? I'd bet on General Motors. I am betting on General Motors before I would bet on Lucid Technologies. Is there upside here? Potentially. The valuation still, what's this thing worth? Let's just go look, and I know fundamentals don't matter, but at certain points they do. And I think they have started to matter for some of these other EV plays as well. CCIV valuation, we're looking, trying to grab it.
Where's my
You're trying to grab it too.
6 billion.
Okay, so it's still fairly, it's not a huge valuation, but I mean, what they say, they got 50,000 orders, or was it 500,000 orders? I don't know if it was 50,000 or 500,000.
He said they're on
missing a zero, maybe.
He said they're on schedule as far as deliveries, which not everybody can say, right? And then he also said that that valuation, which you seem to think is not very large, and I think is quite large. It's the technology. It's not the how many cars can you build. It's not the underlying commodity valuations like lithium, for example. It's the revolutionary technology that justifies the valuation. So
that's what they say.
That's what they say. That's what
they say. Somebody's saying, why doesn't General Motors buy CCIV? Why would they do that?
Yeah.
Why would Ford buy them? I looked at that, Ford F-150. Yeah. Forbes had an F-150 showing that new F-150. I was like, wow, that's an awesome car.
I mean, look, he could end up being right? I mean, like, this could end up being
sure.
We don't know. We're not like poo-pooing it.
No, I am poo-pooing it. I'll say it. I am poo-pooing it. I think he's a very overconfident. The interview came off as very overconfident, very just dismissive of the competition. And I mean, they have everything to prove. Let's be honest here. They have a concept, they have some orders, but they have everything to prove. So just to talk down General Motors didn't really sit well with me. I'm long General Motors, I'm long Ford, I'm long Honda, I'm long all these traditional automakers as EV plays. Some people don't like those, but you know what? I've doubled my money in Ford. General Motors has been a great one here too. They've come back down recently. Yeah, I still think there's, the valuation is attractive, and I think they're going to be major players in EV. So,
we got one on this.
Oh, that's the ARC email. We got the ARC email from last. See, it just sends it out in the morning here now. Do you want to go see what Kathy bought?
Wait, just now?
Yeah.
I'm just going to a daily.
I guess she doesn't send it at night now. She just sent it here right now, the ARC email. So I'm looking at it right now.
Oh, that's it. I didn't see it last night.
Live on the show. We've never had that. That's the ARC email from yesterday. She doesn't like to send it at night because she doesn't want us to trade on it, I guess. But what did she buy? What did she buy?
Okay, 23 transactions, more than a few days. What did she buy?
More Roblox. You know what? I kind of like Roblox here. It's trying to hold this 80. A little cut through and rally trick yesterday. I kind of like the RBLX setup. So that's our big buy yesterday. 181,000 shares. BZ, what is that?
She sold Raven. I guess she's taking profits. Oh yeah, you're right. That is a Kathy one, huh?
Yeah.
Okay, stand corrected.
She sold Pins. She sold Snap. I'm just trying to look at the big ones here.
More BLDE again.
She bought more JD.
Yeah. She bought Baba too. She buys Baba every day, I feel like. And
she's liking, but not much. It's only 7,000 shares of Baba. Oh no, 27,000 the other account too.
She bought PDD, which she always buys.
Yeah. She always picks on the same one. She likes to buy 1,000 times.
That Pinterest sell is interesting. How many Pinterest shares is that? Just 321,000 shares of Pinterest.
Kramer gave her and summed her up really well. She might be the best average downer in the history of the markets.
Maybe.
Kathy with the average downer. She adds to losers, fiercely and competitively, and she adds so much and so often that eventually they bounce back a little bit. She makes some money. She may be the best average down. That's what Kramer says. She might be the best average downer in the history of the markets. I kind of agree with that. Kramer kind of summed her up well.
All right,
You
wait.
just need a lot of money, man. You just need a lot of money, Dennis.
You just need a lot of money. You hope those redemptions don't start.
Wait. Do we? I'm not sure if we have Joel or not. We may have Joel. Do we have Joel?
Hey, good morning. Good morning, guys.
Okay.
How you doing?
How you doing? You okay?
Yeah, my generator's been like going on and off. We've had these power surges, and it's been messing with my internet. So I'm just the power goes down, and then the generator goes on, and then it comes back. So, but I'm good. I'm still trying to get my camera working. But how are we doing this morning? How's everyone doing? We're trading up again. Did we mention Powell speaking today?
I did. Yes, 2:00.
Okay.
Yeah.
All right. So that should be
Exciting.
interesting.
Very exciting.
So
Yeah, very exciting. But no, we're just right back. We're up 6 3/4, but we actually tacked 6 points on after the close. So we're basically where we were at, where we went out at 8 o'clock as well. But another strong day. What, 20 handles from all-time closing high, right? 45.75. I guess that'll be our bogey
Buy the
for
dip,
today.
Joel.
Buy
the dip, win money. Isn't that the way it goes?
win money. Yeah. Yeah.
What about crypto?
Win
Can
money.
you guys get in there and buy some crypto? What's going on?
I don't know if it applies to crypto. Maybe it does. I'm not. As somebody, I had multiple texts. Did you add to your Bitcoin and Ethereum position? No. I actually want to sell it all, but maybe this is the time to buy when you want to sell it all. Is the 30,000? We'll take it back there for 1 second for Joel. Is the 30,000 Bitcoin level going to hold? What is your prediction?
It already no.
No. Clear no.
It's too close. We've been hanging out here for a couple days, right? Well, 1, 2, 3, 4, 5, 6 days in a row. It's down a couple grand. It will bounce, but it's just real. Is it going to turn to be resistance? Is what we got to see over the couple days. I mean, it's still kind of support, but what's going to happen is you're going to dip into the 20s, right? Make that 28.5 low or 28 low. And kind of like we did with 40. So, right now it looks like it's turning into resistance. And just where's the story? Where's the pizzazz? Where's Dogecoin? I mean, it's turned, and which is good for the market, right? When these things, out of Bitcoin.
Is it good for the market? There's a fantastic question. Let's debate that. Even chat. Is the crypto sell-off good for equity? So far, so good. But we have seen a positive correlation. The equity market sell-off led, really where the crypto started sell-off before. We have seen a positive correlation, even back to March. Think back to March of 2020 when they said Bitcoin is going to be the safety play, and we went into a pandemic, and everybody panicked that we might not have hydro the way this thing was.
It wasn't the safety play we thought it was.
Yeah, and Bitcoin went, and basically crashed with the overall market. I would argue that there's a pretty positive correlation between crypto markets and the equity markets. And what does that mean for the equity markets if crypto decides not to bounce back?
Well, it's going to take.
Or does it mean nothing?
It's going to take all the crypto stocks with it, right? Obviously.
Well, the crypto stocks, but we're talking regular stocks.
Right.
In the regular stock market, if crypto, let's just say hypothetical situation, Bitcoin goes back to 15,000. Do the stocks ignore it?
Because, yes, because I don't know how much, a lot of times we talk about like flows over pros, right? Like the movement of the market is just like fund flows more than anything else. And how much institutional adoption is there really in crypto? Probably we're still early days in that. And that's the bull case, right? Is that all the big banks are just now giving their high net worth clients access to this stuff, right? So, and if that's the bull case, then it should also work on the downside too. How much big money, big traditional Wall Street money is in crypto? I don't think that much. Now, so from that side of things, it could stocks could hold up. The other side of that though is like just how much Bitcoin leverage is there, and if Bitcoin were to go down to 18, the unwinding of that leverage could force people to sell other stuff, to cover that. But I don't know how much real traditional Wall Street money is in crypto. For that reason, I would lean towards the market holding up for in the case of any Bitcoin crash if it were to come. That's where I'm at here.
Well, I think it's evident. I mean, we're up here. I mean, I think it's evident that Bitcoin's gone from 60 plus to 30 plus. The
markets don't care.
Yeah, markets don't care. Yeah, I mean, we're still
become irrelevant to the market.
Yep, 42.20. I mean, all-time closing high 45.75. Has the market dropped 50% while Bitcoin's dropped 50%? No.
Well, but I'm blaming you for this 30,000 cut through here, Joel, as well.
Why?
When you came on, it was 30,200 and it just dropped $500 at Joel because it's not going to hold. I'm blaming Joel for the current Bitcoin sell-off. It's continuing to go down. You're looking for the catalyst. Joel O'Connor on Benzinga's pre-market preps of the 30,000 is not going to hold.
Thank you.
Great. That's great for me and Spencer. Thank you, Joel. Thank you so much as we hold a little bit of Bitcoin still.
Never frown. Dennis, never frown, okay?
Never frown. Average down.
Never frown.
I won't be averaging down a Bitcoin.
I mean, well, what do you think? You think El Salvador makes it a legal tender and, a third world country and China is against it? I mean,
I don't know.
Yeah.
Anyway, let's move away. We talked Bitcoin twice on the show.
Okay.
It deserved to be talked about twice on the show. Sorry, Bitcoin bulls. There's a lot. Let's go talk this M&A action in SAFM.
Yeah. We haven't talked to the poultry
Sanderson Farm
for quite some time on the show. There's a daily chart. Let's pull up a 15-minute chart so you can actually see.
What a move.
The headline from last night, I think it was Dow Jones, if memory serves, that Sanderson Farms is exploring a deal. They are saying, hey, everyone, we are on the market. Come and get us. According to Dow Jones. So
holy Joel. Okay, so right now they're exploring a sale. There's no deal. Exploring a sale. $30. That's worth $30. Exploring a sale. $158 to almost $28, I guess, here now. Up to $186. If I was long Sanderson Farms, I would sell it as fast as I possibly could right now. One, I don't think it's going to get much more of a premium than it's already trading at.
Yeah, look at
chicken. This is a chicken, producer. This isn't high technology. This isn't a biotech company. You're already jacking a 20% premium onto the price. You don't even have a deal yet. So I think if a deal gets done, I think a deal could be under $200, even if they do get a deal. And maybe they do, maybe it gets $195 and you get another $10. But I think risk reward actually almost sets up to short the stock here. Not saying to short it because I don't like shorting stocks and comes out at 200, you lose $15, but I think, risk reward up 30 points on just rumors is a time to ring the register, in my opinion. If this was a biotech company, completely different story because they get some crazy premiums. I don't think I can get much more of a premium. I think if the deal gets done, it's going to be like $195 tops. That's my opinion. Just my opinion.
Oh boy. I couldn't agree with you more. Who's going to buy them?
There's lots of potential buyers. It's not a huge market cap. It's not a huge.
It's not that big of a company.
I don't think so.
Why not Amazon? They could buy any. They buy.
Amazon wants a chicken producer.
Why not?
Why not?
No,
why not? It's only a $3 billion company.
Okay.
So it's fairly small.
Well,
I think there is potential. I don't doubt that the rumors when it came from DJ. Who did it come from? Wall Street Journal?
Yeah, it came from DJ.
Dow Jones.
It came from Dow Jones. Yes.
Yeah, Dow Jones. This isn't. When Dow Jones breaks a rumor, there's usually something big too.
Well, they're exploring.
I'm exploring a sale, and I don't doubt that they're doing that. It's just a matter of is that worth 30 points on a chicken producer? That's a big pop here. Again, I don't think it is. I don't think it's worth that much.
I mean, considering it was at 150, 156 on Friday, and now I totally agree with you on that one. I don't know. It just pop. I'll give you the pop where it went to, and then you can do your own work at home. It got to 188.69. It's right up there right now. Usually with these things is you wait, right? And kind of like the longer the deal doesn't come, then the more you're concerned. Yeah. So right now, hey, everyone's happy. They're bidding it. They're looking for the highest possible price. But time. Just how the time elapses on it is what I would the longer it takes for a deal to come, the more of a chance I think it tails off.
Yeah, just my opinion. I have no position in it, so it's just my opinion. But I would sell it if I owned it. Tyson's $26 billion market cap. I mean, it could be Tyson. Could be $2 to $3 billion isn't much for them to swallow. But it's just such a big premium. I just don't think there's going to be that huge. Oh, they're taking this out at $250. I don't think that. I think it's 195 to 200 maybe in a perfect world. You're going to get 195 to 200. Well, you got most of it already. And then if the deal doesn't materialize, it's going to go back down to like 160. So risk reward sets up 2 to 1 the opposite way. I think maybe even 3 to 1 the opposite way. Yeah, tough to buy it here.
Just take a look. I know I've got 2 yellow lines on here, which is stupid, but this is just Sanderson Farms year to date, more or less year to date. Sanderson, Tyson, Pilgrim's Pride, and Wingstop. Wingstop was all over TV yesterday. They got this new thigh thing because I guess the price of wings is going through the roof.
Yeah, eat chicken thighs. I like chicken thighs.
Yeah, had them last night. So anyway, Sanderson Farms has been your best performer of the poultry group. And then there's also what JBS that trades on OTC in the US. But those are your largest chicken players. So
PPC is $5 billion company. It's getting a little bid here this morning just because of Tyson. If Sanderson's in play, maybe PPC is potentially in play too. So you get the sympathy players. I naturally think that as well. PPC potential sympathy play. I have no position in it, but it is bid up here this morning.
Yeah. All right, that's enough on the poultry thing for now. Let's move on to, we're gonna have Dave Lauer join us in like 2 minutes here.
Okay, so give us one stock.
For that, we'll do one stock between now and then. I saw Tupperware was up this morning. They announced the buyback. Speaking of buybacks, I cannot remember if I mentioned this yesterday, but we have already surpassed the record for amount of buybacks in one calendar year. And it's not even halfway through the year yet. We have already passed the all-time record, which was set, I believe, in 2015 or 2014, one of those years. We're already past that. There's been almost $600 billion of buybacks this year. Tupperware adding to that this morning, announcing a $250 million buyback. So TUP is trading up on that headline.
It's tough because it's been in such a downtrend. There's so much overhead supply. There's so many bag holders in this thing. It's oversold, so there is room higher. I'd think 22.5 to 23, but it's kind of in the middle of nowhere. It's a tough trade. Joel, I'll throw it to you because I don't even know how to trade this one.
Oh, wait, Joel, hold on.
We lost Joel.
No, he's here. We got him.
These are the kind of setups you like to see because you got a pop, right? And it went to 22.20. Your 3-day high, 22.25. Resistance is resistance. Still is taken out. Yep. It backed off. I mean, it's showing it. That's resistance for now. So also that 22.25, that was your 4-day close. So right there, that's what you got to get through. That's your bogey. Until you do, resistance is resistance. After that, it does open up to 23.37. But right now, backed off, hit it, trading very technical. And even it got, I don't know if those were some late prints when it dipped down to 2040. But yeah, resistance is resistance till it's taken out.
All right, let's bring on our guest. Super excited for him. Dave Lauer, in another life, was a high-frequency trader. Now he runs Urvin AI, and he's joining us now on the show. Dave, welcome. Long time no speak. How are we doing?
I'm good. Thanks for having me on, guys.
Thanks for coming on. We appreciate it. You're on our show before you made it big time.
That's right.
now you're too big time for us.
CNBC, that's a big time, right?
No, that's good.
That's not what I was referring to. I was
and the following. You got the huge following.
You're like
hero. These apes. The apes like you. I think.
I love them, man.
Are you part ape?
I'm part ape. I've got to be.
Trying to grow the beard here.
Yeah, that's right. They call me the silverback, so I'll take it.
Let's just start here. Like, what do you make of the movement?
I find it fascinating. I really do. First of all, I have never seen this kind of popular interest in not just markets, but market structure. They actually care. They want, people want to learn more about it.
Yeah.
They want to understand what the rules are, how things work. That's the only reason that they're interested in me, right? That's all. I mean, there's not much. There's not much
You're
else.
an interesting person. Don't sell yourself so short here, Dave.
I mean, I've been talking about market structure for a while, and nothing has come like this. So I found Reddit. I started going on there. I did an AMA with them, and that was it. I've been engaged in the community and helping them. Just sort of correcting misinformation where I see it, trying to bring more information to them so they can make more informed decisions. And I think it's a really fascinating phenomenon. I think that they really do care and they're learning more. And I think there are lots of market structure changes a lot of people want to see. I know there's a lot that we agree on. And this strikes me as actually an opportunity for that, because when the public cares, the regulators tend to pay attention.
I think you're making a great point there. And I mean, Dave, you've been on our show. You've come on the last 10 years. I've talked to you for 10 years about this kind of stuff. And like you said, nobody's really interested. The eyes start glazing over when we start talking market structure. They're like, get back to stocks. I don't understand all this market plumbing. I don't want to own this market plumbing. But all of a sudden, hey, market structure is cool. We need like that shirt that says market structure is cool.
Yeah, it's great.
So tell us how, obviously, you've told some of our fans, when we were starting the show 7 years ago, but kind of sum up, what are your thoughts here? Obviously, we got the Reddit movement, but how can we improve, what we're seeing with all this off-exchange market making, payment for order flow? What are your thoughts?
I mean, I've said for a long time that I think a rule similar to the Canadian dark pool rules would be a very effective one, a very simple one. I tend to prefer simple fixes, not incredibly complex ones. The trade at rule that was part of the nickel pilot, that was a crazy complicated rule with all these exceptions in it, right? And in Canada, it's so simple. You want to trade off exchange, you got to give material price improvement. That's it, right? A full tick if the spread's more than a tick wide, or half a tick if not. It's a very elegant rule. I've talked to Canadian regulators, and they even say, we're often asked, how do we measure the success of this rule? Is it improving execution quality, that kind of thing? They're like, we don't even care about that. All we care about is what's the percentage of off-exchange trading. It is our policy goal to keep that lower and to keep trading on exchange. And that should be the policy goal of the SEC. And when you make it the goal, it suddenly becomes relatively easy to make those kinds of changes. So, in terms of off-exchange trading, I think that's the easiest solution.
Why, and I'm going to throw this to you, why is off-exchange trading necessarily at certain levels bad for the markets?
So, and I know you agree with this, Dennis, but
I do.
What you have in U.S. markets is you have lit exchanges, and on the lit exchange, you establish the national best bid and offer, the NBBO. And that's where you have price discovery. That's the definition of price discovery. That's what it is. It's where is the NBBO, and then as that NBBO is changing, where are things trading within it? And so the purpose of markets twofold, right? Capital formation, price discovery. And price discovery is really what is happening on secondary markets. And so when you start taking all this trading off exchange and all of the profitable trading, right? It's happening everywhere. It's not just retail internalization. It's broker-owned dark pools and other types of, ELP providers within broker order routing algorithms. It's everywhere. They're segmenting and siphoning off order flow at every possible opportunity, so that only the order flow that nobody wants to trade against makes it to the exchange, which makes it really difficult to make markets on exchange. I want market makers to make money, right? I want market makers to be profitable, and I want open competition for order flow. Those two things should be like, apple pie and meat and potatoes. Like, how can people disagree with those things in terms of what we have as a goal for a market? But when market makers aren't making money, and they widen their spreads, And the trading that's happening off exchange always has to happen within the spread. And so let's say I'm a market maker, right? And something's being bid 10 by 11. And I come in and I want to improve that to 1050. I want to add a bid in there at 1050. I put my bid up. I take the risk in the lit market, and suddenly I see all these off-exchange prints start happening at 1050 or 1050, 10.50001 with like de minimis price improvement, and it's the internalizers free riding off my lit quote, and that's a disincentive for me to post that bid and take that risk because they're queue jumping.
Yeah. Well, that's what it is. And, and we've talked about this for a while too. And we've done a couple studies with the CFA Institute on this as well. I did one back in 2016, which got zero media attention because nobody understood it. But we went through it, me and Svi Rosov for a long time. And we were looking at, when were these executions? So let's just say 40% of the market, was off exchange, and it's grown. I mean, now where are we? We're approaching 50 in some
Almost
cases,
50,
but we were like
and
37, 38 when we did that study. But what we kind of found is exactly what you were saying, is like the lit quote was getting executed only when it was getting picked off. So we found, that there, even though, it was still 60% was going, you'd see, the trade, the stock, and we looked at a lot of penny spread stocks where the stock was trading in between the penny, and it's all, you're seeing FINRA on the tape, FINRA on the tape, FINRA on the tape. And then all of a sudden, the quote, dynamics get a little bit weighted to one side, quote rolls over, and they pick off everybody on the bid. So, okay, well, there goes that's your 60% volume that all hit in one shot. So what we found was that the lit quote was only getting executed when it was getting adversely selected against, you call it, or picked off. So what that does is exactly what Dave is saying, is discourages market makers. You put your bid out there and you only get it when you're losing money, you're going to be less inclined to put that bid out there next time.
Yeah, I mean, that's part, right along the lines of that IEX study. I don't remember the exact numbers, but it was something like 60% of volume getting executed within the 2 milliseconds around a quote change. I mean, that's crazy.
Yeah, picked off is what that is. So,
it's
I mean, as a market maker, you're not going to want to put that 50-cent bid out there if all of a sudden it's 50-cent offer on you when you're getting filled on it. So if that discourages liquidity, eventually spreads get wider. Now, I want to throw this back to you too, is the only issue is what they've argued is spreads are still tight. Spreads are still narrow. I think I know where you're going to go, but spreads, are as narrow as that's we looked to 20 years ago and we looked at spreads now. Spreads are narrow. What are you complaining about?
Right, 20 years ago. Yeah.
That's what they do.
I know. The things are better than when fractions stocks were trading by fractions. So what are you talking about? We should have 50 places for stocks to trade in 10 microseconds. So I think there are two responses to that. The first is actually, and I don't know if you saw this, but Alex Gurko, who's the CEO of XTX Markets, has been getting active on Twitter, which has been kind of a treat because the guy really understands market structure. He works at one of the largest high frequency firms, but he's not an internalizer, and so he understands the sort of disingenuousness of all these arguments. So his firm did a study and actually showed that U.S. spreads, when you take liquidity into account, are actually not as narrow as they could be. In Europe and Canada, they see tighter spreads as a factor of, in terms of when adjusted for the level of liquidity, right? The U.S. are the most liquid markets in the world. And so you can't just look at the spreads as they sit. You have to look at them relative to the level of liquidity, especially when you're comparing against previous eras or other markets. So I think that's item one. And then item two is this other study that came out from Hitesh Mittal, and it showed that, in fact, if all of that retail order flow were to be sent to exchange and therefore make market making more profitable and let market makers make tighter markets, that spreads could compress by 25% or more. I mean, that's a huge number. That's billions and billions of dollars that's being extracted from pension plans and mutual fund companies who have to interact against this lit NBBO. I mean, the economic cost of that really astonishes me. It was actually, we've talked about this for a while in a theoretical way, but that 25% number was really shocking to me.
What do you think the fix is for this? If it's not trade at, how do they start to take volume and get it off exchange? Like, I mean, and some people argue if you just kill payment for order flow while internalizers, off exchange market makers still arguing, we're still going to get that flow because we give them a better execution. We give them size improvement. Right. We can guarantee the bid and the offer, and it's just that relationship is already built. Is there a fix for this?
So part of it, my impression is, and this is one of the problems with market structure, right? You start to like pull on a string, and you end up with like the entire mesh coming with it, right?
Right.
So one of the issues is SRO immunity. That I mean, now you talk about eyes glazing over, but what it comes down to is that stock exchanges are immune from legal repercussions for their operations that involve matching buyers and sellers, and so. When a retail broker has a problem, when they're dealing with an internalizer, they can go to the internalizer and say, fix this problem, but they can't go to the exchange because they have no repercussions, so they don't connect directly to the exchange. So that's one of the issues in terms of legal immunity of a for-profit, publicly traded, self-regulatory organization. That none of this makes any sense. And it's all because of regulation. So we need to start to peel regulations away. We need to get rid of this SRO status. We need to get rid of immunity. If we want exchanges to be competing with each other, then fine, let them compete. And one of the things they could compete on is service to retail brokers potentially. So I think you do need to get rid of artificial inducements. That includes payment for order flow. That includes rebates. That includes volume-based price, exchange fee tiers. It includes everything. You have to get rid of any inducements to trade that aren't based on execution quality, and then you actually need to enforce best execution. If you start to do those things, and you get rid of SRO immunity, I think you bring a ton of trading back on exchange, and I think you really simplify the system instead of having this massively complex, fragmented system. I think it benefits everybody, but it's a big ask also.
All right, Dave, to bring it back here, how can people learn more about market structure?
I mean, they got to follow Dennis on Twitter, right? So that's
follow this Dave. Dave, no, I've learned a lot from Dave Lauer over the last 10 years, I'll tell you. So Dave and Chris Nagy, and there's been a lot of market structure nerds there to talk.
It is. It's a great scene. And we're even Reddit has become a place to learn. And we're actually going to build a new site. We're calling it Urvin.finance, and we're probably going to crowdfund the funding for that. And part of it is going to be focused on getting better data into the hands of retail investors, because the data that their brokers are providing them is pretty poor. And part of it is going to be providing support for communities to do collaborative research together. And then part of it is going to be education and advocacy.
What kind of data are we talking about? Like short interest data or what?
Every high quality data set we can get access to, we're going to provide, and we're going to put it in context, because that's another problem, is people really struggle to interpret a lot of the information out there. But I mean, when I'm coming at it, I'm thinking market data, because that's what I'm used to, right? So we're going to provide the highest quality market data. The market data, like if you go on a big retail broker's active trading platform and just go look at time and sales, you won't believe there's even an order protection rule, because you're seeing prints outside the NBBO all over the place, and you're seeing this jumbled data because they don't invest any money in their data, and it's the worst data that you can find. It's been kind of shocking to me. So when people see conspiracies all over the market, a big part of that is they're seeing really poor quality data, and they're not having that data put in context for them. And so that's another thing that we're setting out to fix. And speaking of short interest, I think that's I wanted to bring that up and ask you guys, because Dennis, I know in terms of naked shorting, that's something that we probably will disagree on. And you have said on Twitter that you don't believe that this is occurring at all, or if it is, it's de minimis. And so I'm
think
curious.
It's small. I think it's smaller.
You think it's small?
Yeah. I think it's smaller than what everybody thinks. The thing is what it upsets me, because we get in this big movement, and I like the movement. Yeah. And I think they're focusing on the wrong spot. I mean, naked shorting is already illegal. So, you can't really ask the regulators to make it illegal. It already is illegal. I mean, we do have a market maker exemption. Yes, maybe they could, curtail that to a certain extent, but you still need liquidity. So I don't know if I totally agree with that. But, I'd like the focus to switch from, this naked shorting. We got to stop the naked shorting to start focusing on stuff that you just talked about for the last 10 minutes is, let's focus on, getting more orders onto the exchange. I'd like that focus to move. So I think, where I'm trying to, with the naked shorting, saying I don't think it's a big deal. I wanted them to focus on the bigger deal. So I kind of wanted to switch the focus. But, talk the naked shorting for a minute, because I want to hear what you think about it as well.
Yeah, so I mean, I agree. I agree in some part. I do again, and that's why I talk about it. I do want the focus to be on this complexity of markets and this, these inducements and incentives. But from what I have seen, and for the last couple of years, I have been doing different types of analyses, including market manipulation, looking at public market data, and looking at court cases and enforcement actions. And I can, from what I have seen, it is a problem that is actually much more rampant than most of us would have thought coming out of a well-regulated entity. Like if you work at a place that has a strong compliance department and you're used to, dealing with all of these controls and back office settlement procedures, and the kinds of things that take place when you get your locates in the beginning of the day and how you have to manage that and any fails that happen, you come into it and you're like, oh, it doesn't really happen. And when it does, it gets resolved quickly. But then you start looking at some of these enforcement actions that are well documented in recent times, not like pre-reg show, but in the last few years, there have been FINRA enforcement actions, there have been private lawsuits, there have been SEC enforcement actions that kind of show, I think, a very tiny piece of a much larger problem. And I do believe that naked shorting is a big problem in markets, and I think it's often paired with market manipulation. And I from the studies I've been running, I've seen astonishing examples of clear market manipulation in public market data that is, as far as I can tell, not being surveilled or enforced at all.
You may be right, and I think you make a good point. As I put on the glasses, and I'm coming from a prop firm that's highly regulated, we clear Goldman. I mean, the regulation at Goldman is ridiculous. So I come with the Goldman lens on and think that, I don't see how this could be rampant, because if I was doing naked shorts, Goldman would shut me down. The Goldman is watching this. It's not just regulators. Goldman watches their customers and makes sure there's locates. And, we're very regulated at Bright Trading, probably because of Goldman. But maybe you're right. You get some of these smaller BDs. Maybe it opens my eyes up too, because maybe some other stuff. Maybe there is some shenanigans happening at these other BDs. I can't speak for them. I'm not with them, but even though it's illegal, I guess it could happen. So, and you say you think it is happening at some of these smaller firms.
I've seen a lot of evidence of it. I'm someone that needs to see data before I can believe something is happening.
Yeah.
And I've started to see, and not all of it's public, because there's private litigation taking place as well. There's enforcement actions taking place, but it has surprised me the extent to which I've seen it. And then the ways that people are trying to roll fails over, right? So they can amass large fails, and then they can use synthetic positions. They can use options. I mean, there's even documented court cases of people pushing their fails out to offshore affiliates of large broker dealers to warehouse them, which is something I had never even heard of. I still can't quite figure out the exact mechanics of how it would work, but this is in court cases where firms have settled because of these issues. So
can you give us a few examples of that?
I did post some recently.
We're throwing you on this. We're throwing you on this spot there. But,
no. It's so I had done an AMA on Reddit with Wes Christian, who is a lawyer who works on these issues and has been working on these issues for 20 years. And he had sent over some material. Here it is. So if you give me a second. So it's just a slew of cases. FINRA against Credit Suisse.
Is it that the fines aren't enough, maybe? Is that what the problem here is? Because it is illegal.
I think very much so, yeah.
It's the fines maybe just aren't enough.
Yeah, and I think regulators are not paying close enough attention to something like this. So I'm trying to find a good example here. A lot of these are from, because these things take a long time. to sort of work through, but here, here's a Goldman case between November 2008 and mid 2013. So that was long, after post reg, after reg show. And it was this auto locate issue. Did you hear about the auto locate issue at Goldman?
No.
So you would think Goldman is really competent and strong with their compliance operations, but at one point they had more than 20,000 locate requests a day, and they had not increased the size of the team that was managing
by this action,
those responses, and so they added a key to their system at the F3. They added a command, the F3 key, that would just automatically auto-locate automatically, and that's all they did for all 20,000. So they never actually had the locates, and this was for 5 years they were doing something like this.
I think before 2008 and 2009, naked shorting was rampant. So I will say that is, I think, this was obviously something that regulators were hardly looking at it before the financial crisis, and financial crisis did bring this attention. Dodd-Frank came in, and they did regulate this more. And I do believe before 2010, even I say 2010, before it really all came in, the new regulation, that this was something. But because even like at Interactive Brokers, like I've been at Interactive Brokers for a number of years, and before 2010, I don't remember getting these buy-ins. And now you get, like, they don't locate it, they come in and they buy you in, right away, like they're trying, because they don't want to get fined. So there has been some positive change for sure from that regard, but maybe the process still needs to be obviously cleaned up here, and maybe the fines need to be higher.
Yeah, I'm seeing, again, a lot of these from 2015, 2016, these are not such old cases. It just, I think that it's an area that we need a lot of improvement. And I think that we should see some better oversight, not just regulators, but private firms, as you're talking, the brokers who have the responsibility, the DTCC, who's, there have been some rule changes coming out from the DTCC, but I don't think anything that will actually make a material difference on this. And I know what Bill Hart's explanation, as you've been talking about it, on the 140% GameStop short, but you can't tell me that it makes any. I still don't believe that it makes any sense that you can have that level of synthetic shares out in the market, right? That you have more, because for every time there is a short that is failed, and that adds over and above the float, that's another share that someone out there bought and thinks they're holding, right? But actually isn't, unless that position ultimately gets delivered.
I mean, that's another issue all in itself that he's brought up, because obviously, there's too many synthetics. If you're lending the same shares again and again and again, I mean, that's a whole nother can of worms, which, I'm not sure anybody knows how to solve that one either.
Yeah, I think it's a big problem, and I think we need much stricter oversight on shorts and borrows and locates, and it's a dark area of the market. There's not a lot of transparency. It's one of the least transparent parts of the market.
This has been a fantastic, fascinating discussion. I forget who said it earlier, but it feels like I'm just watching two smart people have a conversation while I'm over here just eating crayons, because that's kind of what it feels like. But
that's what the apes say.
Dave Lauer he's been our guest. You've seen him on Reddit. You've seen him on TV. His new site's got Urvin AI. He's the CEO there. Dave, would love to have you back here in a little bit just to keep tabs on this, because this has been a fantastic discussion. Thanks a lot.
Sure. Thanks for having me on. I appreciate it, guys.
Thanks, Dave.
Right.
Always good to talk to you.
All right. We went way long with Dave, but that's all right, because it was a great conversation. So I hope you guys enjoyed that. If you did, drop us a like. We'd appreciate that.
Dave Lauer is a great follow. Like, we've talked market structure for years, and it's funny. He says, it's like when we were bringing market structure experts on the show, we used to do it like more regular. We obviously we bring Tim on, but it seems like 4 or 5 years ago we do that, and people just weren't interested. But they're starting to become interested in market.
We're ahead of our time, Dennis.
Yeah, I know. We're too ahead of our time. I mean, I'm talking this stuff.
We're a legend in our own mind.
Nobody cared. We did that study in 2015 in the CFA Institute, and it got zero media attention. I was talking about the quote rolls. I was like, this is so awesome. I'm like, look at this. The whole lick quote's only getting executed when it's getting picked off. And we had all the studies and the data to show when we were looking at this. and there was zero interest, no media attention. We brought it to the regulators. The regulators' eyes were glazing over as we were talking about it. I mean, it was boring.
It's
but now
hard to
market structure
understand.
is becoming cool.
It's hard to understand.
It is. The stuff's hard to understand. And as soon as you're not understanding one concept, and then we build on that concept, and we build on that concept, and the person's looking at you, it's like, I have no idea what you're talking about.
Yeah. That's it.
All right. All right, guys. Sorry I was a little late getting started. We did get to cover a lot of tickers, but I'm going to go hop over to premarketprep.com and cover them. And Spencer, get back with you at 3:30.
All right. Have a good one. Let's get the internet all fixed. Dennis, any final thoughts before? I mean, we missed while we were talking with Dave. Splunk announced an investment from Silver Lake, so that blasted off.
Boom.
Fubo just had a headline. They're joining the Russell 3000, so that's going up. So we got some movers here.
Oh, that's that. We knew they were joining the Russell 3000, but let's put out a headline that we're joining the Russell 3000 so that everybody knows we're joining the Russell 3000.
Yeah. Well,
So Russell Rebalance Friday, folks, is going to be some fireworks. There will be some build up towards that. Stocks going in historically have tended to trade up into the event. Stocks coming out historically have tended to trade down into the event being the fourth Friday of June. But again, I've seen this trade go the other way. 10 years ago, if you would have asked me, I'd be long all the ads and short all the deletes going into the event and usually banking coin. That is not the case. It gets crowded. It goes both ways sometimes. So it's a more unpredictable event. So like I said, the way I play it is to provide liquidity into the close on Friday, as opposed to trying to get a portfolio ahead of the event, because sometimes that portfolio can get ugly if you're on the wrong side.
Yeah, and that'll be Friday, so keep that on your radar for this week. All right, Dennis, have a good rest of your day, man. Good luck out there.
Thanks. That was great with Dave.
Yeah, that was who was it? Dylan saying boo, Spencer, because I took the guest away. Well, people
We'll bring it back.
We'll bring Dave on, but we kept him on for like 20 minutes. That's a long time.
We went overtime with Dave.
Yeah.
Usually it's 10 to 12 minutes. We went over 20 minutes, 22 minutes, I think. So we went overtime for Dave Lauer.
Yeah.
Great stuff.
All right, let's just go through a couple movers here, and then I'll get off the stream and we can watch David Green live trade the open. We're all set with David Green for today, right? Okay, so let me bring up my Benzinga Pro. There it is. I mentioned the Splunk headline. This came out while Dave was on, or just beforehand, I should say. They announced a $1 billion investment from Silver Lake. So this feels to me like a secular thing. Like I'm getting the sense that every day there's another positive headline on the cybersecurity space. We also had an upgrade this morning. Was it CrowdStrike? I think it was CrowdStrike, right? Yeah, Stiefel upgraded to buy, raising the price target to $300. So CRWD is, you can see the activity this morning trading higher. It does seem like every day there's another positive headline for stocks in this space. Okay, so I've mentioned this before. I do own the CIBR NASDAQ cybersecurity ETF. But whether you're looking at that, whether you're looking at individual names like CrowdStrike, like Splunk, even FireEye, which never really moved for a while, starting to maybe show a little bit of life. Actually, no, it's not. Take that back. But you can look at like Palo Alto, right? You can look at CyberArk. There's been some M&A in the space, right? Cloudera just got bought. So I'm getting just this general sense that every day that there's just a positive sentiment towards cybersecurity right now. And I like the whole space, which is why I own CIBR. But today you get the Splunk headline, you get the CrowdStrike upgrade. Wouldn't shock me for a second if the entire space trades higher today. Yeah, Fortinet. There's one that I missed. Thanks, all styles. I didn't name all of them. Oh, look at Fortinet. Look at that thing. It's been a beast. Yeah, Datadog, same thing, right? Yeah, I mean, they all kind of look strong in the last couple of months, right? So I like the whole space. Yeah, there's a few other ETFs, right? There's CIBR. All styles is mentioning Bug. There's like here. Let's look them up here. We can do it on this site that I use, ETF database.com. Oh, I have to log in. There's like a half dozen or so major cybersecurity ETFs. Just pull it up on the screen. I'm going to show you guys, give some free promotion. to this website that I pay for. And like to bring up every so often because I think it's super valuable. 1 second. I'm just gonna bring up my screen and have you all take a look at what I'm seeing. Okay. Where is my... All right, that's weird. Oh yeah, the hack is the big one, right? HACK. All right, I don't know why. Too hard to find right now, but hack, CIBR, bug, those are the big three. There's a couple other ones that I'm forgetting, but what else did I want to mention? I wanted to talk about, I mentioned the Splunk headline, the CrowdStrike upgrade. There was a few other headlines that I saw come by my newsfeed while we had Dave on that I wanted to hit on before I hopped off the stream. Oh yeah, Fubo was one, right? So FUBO. We just talked about that with Dennis, right? This one's been strong. Let's bring up my chart here. Fubo's been strong. And they're just announcing it's not even new news, right? Not even new news. This was out. This was out 2 weeks ago. If you watched our show, you saw us talk about this. And here's how I know. You Google Russell Reconstitution 2021. It brings you to this page. Okay. You add, you go to the ads list, which is right there. Boom. Not half, but like a certain number of these companies have since come out with press releases saying, "Oh, we're joining the index." Look at Fubo; they're in there, right? Not new news. This was out 2 weeks ago. But anyway, the market doesn't seem to know that or care. So I don't know. What else? Coupon Boy's asking about Mud's earnings. I know they were debating this one on SPAX Attack the other day. All right, what did Tops do? Q1 sales of $59.3 million, up 55% year over year. All right. They see sales for this year at $740 million. Yeah, stocks up, and let's go to a bigger. No, let's leave this. Stocks up pre-market, looking nice. I think they were debating Muds versus Playboy on SPAX Attack, and I think I gave my vote towards Playboy, only because to me, the whole like trading card thing, it seems just so cyclical. And I get there's like the NFT angle, and I know that the market's hot right now. I got friends that are back in doing trading cards now and trying to make money doing that. And great for everyone doing that, but I just think this is such a cyclical thing. I can't see that being a long-term trend. I see this more of like a short-term thing. So that's just my take. But anyway, looks like good numbers for Tops last quarter. I'm not sure when the merger vote is, but Mud's not looking that bad over the last couple of days. It's still in a downtrend, but hanging around that $11 range. Yeah, Mitch says he thinks I'm wrong. To each his own. Agree to disagree. He says Mitch said Muds was the winner of that debate on SPAX Attack. If you're talking about, thank you, Vegas. All the cybersecurity ETFs I couldn't remember. They're up on the screen. iHack. That was one I was thinking of. iHack. So there's a few tickers. If the space interests you, as it does me, that you should take a look at. Again, I own the CIBR, or just looking at the individual companies that are within those indexes or ETFs to check it out. All right. What else did I want to say? I think that was it. I know. Oh, yeah, ALF. We had the ALF headline. ALF is the same story, right? We talked about. Oh, no, we didn't. So ALF announced a buyback this morning, right? A $2 million buyback. All right, so the stock is up. All right, what is the float here on ALF? See if we can take a look. How many shares outstanding? 12 million shares outstanding. So the float's going to be lower than that, and now it's going to be even lower than that because they're doing a buyback. So, all right, stock's up. You can see this morning, pre-market chart looking like we're going to 10. In Alfie, we had this headline in Benzinga Pro Looks like we had the exclusive about a half hour ago, or a little more than that now, 40 minutes ago. Hey, buybacks, as I said, buybacks are hot. Buybacks are the thing to do now. I believe we talked about this last year where we saw this, we thought this could happen, right? Because all these companies are going to be flush with cash from the government and stimmy, and they could either pay their workers more or just buy back their stock. And a lot of them probably buying back their stock here. What else, Larry? Any good SPACs? You got to wait 2 hours, Larry. Tune into SPACs Tech to talk about, find out what the good SPACs are, man. That we have an entire show devoted to that every day from 11 to noon. What else? I just wanted to make sure I wasn't missing anything in chat, and then I will hop off in a few minutes and cede the floor to David Green. He's going to live trade the open from 9:30 till about 11 o'clock, give or take. We got SPAC Tech. After that, we got our Power Hour. We've got Get Technical, our show just for charts. At 1 o'clock, the BZ Crypto Show is at 2 o'clock. Biotech Buzz back today at 2:30. We got the At the Close Show with Joel and I at 3:30. Money Mitch at 4, and then the Cannabis Insider Show at 4:30. Last show of the night will be Trading Nomadic at 7 p.m. I mentioned this yesterday, and I want to mention it again today. The next Benzinga Bootcamp is this coming Saturday. If you have not attended a bootcamp before, maybe check it out. Could be of interest to you. I'm going to put the link in chat right now. You can also go to benzingabootcamp.com to learn more. There is the link. Nick Shaheen will be there. He's a longtime friend of the show. David Kang from Prosperity Trader, Dan Pipitone from Trade Zero, Michael Edward from True Trading Group. They're going over setups, charts, options, the whole thing. It's a full day of programming, 10 to 6 on Saturday. The Benzinga Bootcamp link is in chat or benzingabootcamp.com to learn more. Art Styles. We got a lot of great feedback on today's show. I guess we have to get Dave on more often. But I'll be honest with you guys, a lot of this stuff goes over my head. It really does, right? It really does. Oh, thanks for the reminder, Bill. Let's talk about Plug in a second. But a lot of this market structure stuff is super complicated, right? And that's why I sort of roll my eyes a little bit, I have to admit, when I see like people on social media. Doesn't matter what platform, right? Could be Reddit, could be Twitter, could be Discord, whatever. When I see people arguing about market structure, I roll my eyes because like I know that this is complicated, and the majority of us, and I'm in this camp as well, probably don't understand as much as we think we do, right? Like I know people like Dave get it, people like Dennis get it, Tim Quas gets it, Joe Saluzzi gets it, but most people, I think on the internet, because I just know how complicated this stuff is, and so that's why I sort of roll my eyes at these arguments, these debates people have, because this stuff is just so complicated. So maybe I should learn to just trust more. But I'd rather be skeptical of everything that I see. Okay, Plug Power had earnings. Thanks for the reminder. We didn't get there on today's show. PLUG had earnings this morning. The only really notable report overnight here. EPS missed. Jesus, they lost 12 cents versus an 8-cent loss estimate. Sales of $72 million versus $76 million. All right, a miss and a miss. Let's just go super long term on this Plug Power chart. This is what gets me every time. You can talk about the short term story or whatever you want, but I can't get past this, right? This is not a new company. It's been around for 20 years, more than that. Okay, Ballard Power, same thing. Fuel Cell, same thing, right? Aaron Bree and I were talking about this yesterday. Like we were looking at an ETF. The ETF sounded great, right? It was like a hydrogen ETF. It sounded super cool. And the top holdings were Plug and Ballard Power and Fuel Cell. And like, if this company was so disruptive, wouldn't they have done it by now, is my question. I don't know. I look at this, I just see overhead supply. So the conference call is going on right now. You can click on this in Benzinga Pro to listen. But I don't know. I can't get behind these. Sorry. Can't do it. Okay. What else? I just don't want to leave anything in chat before. Yeah, stock is up. Go figure, right? I don't even know. Maybe what they're saying on the conference call is good. Who the hell knows? What's everyone trading today? I just want to find a couple more tickers to keep my eye on, and then I'll leave. But David Green will start at around 9:25. Marvel, that's a good one. U.S. Steel, every day we get asked about U.S. Steel every day. It's crazy. Let's go to our movers tool in Pro just to see what's up and what's down. You know what's down? Every single crypto stock. And Asana, finally. Jeez Louise. I thought it was never going to stop going up. That's not Asana. That's Asana. I thought Asana was never going to stop going up. Down yesterday. No, that's today. Down this morning. Taking a breather for once. Jeez Louise. You know what's interesting? Is Asana does the same thing as Monday.com, right? What's Monday? MNDY? Yeah. Which just had its IPO. Monday, it's done okay, actually. Okay, for some reason I thought Monday was down. I guess because it was down yesterday, but I didn't realize it had gone up that much from the IPO. Okay, interesting. Okay, that's going to be a wrap for me. I think what I want to do almost is just leave the stream up. You know what? Let's try something new. Let's try an experiment. I've been a couple of times over the last few weeks. I've been bringing on turning on the Squawk and Benzinga Pro, and it's always been like middle of the day, after the open, like 10:30 or whatever, or 11 o'clock. Let me bring on the Squawk right now into the open for a few minutes here. I'm going to turn this on in Benzinga Pro, and I assume we're going to hear some squawks from Charles because this is a busier time in the morning for him. So. If you don't know what the Squawk is, guys, it's probably the most loved and the most known feature in Benzinga Pro. We have a guy whose job is to just read headlines out loud, so you don't have to be looking at your screen to actually see them, and allows you to do other things like look at charts, for example. This is Benzinga Pro, by the way. If you don't know it, you should get to know it. pro.benzinga.com. Free 2-week trial. And discount code YouTube20 to get 20% off any Benzinga Pro sub. So we've got the Squawk on. We've got our movers tool. Oh, look, a mixed shelf offering from her H&R Block. Let's pull up a chart. Probably not up because it's H&R Block. Oh, no trades. Look at H&R Block. Oh my gosh. Guys, why don't we just close our eyes and buy literally every stock in the world last March and April? We should have just bought everything. Stupid. Anyway. Yes, thank you for the reminder, Born to Be Free. Drop me a like if you can. I would greatly appreciate that. I derive my value from how many likes I get. So the more likes, the more I like myself. 450, not bad. Let's get to 500 though. We're almost there. And let's just wait for a Squawk. If you haven't heard the Squawk before, I would like you to, because as I said, it is one of the most known features.
RUTH, Romeo Uniform Tango Hotel, Ruth's Hospitality Group. April comp restaurant sales up 2.1% versus 2019. May comp sales up 6% versus 2019. That's RUTH.
See, there we go. So you can see the headline in the news feed.
Says on June 7th, the company made a $35 million debt repayment. That's Romeo Uniform Tango Hotel, Ruth's Hospitality, RUTH.
So you just heard the headline right there, right? And you can see the headline is not even in the news feed yet, right? Because obviously it's easier to read a headline than it is to type one out, right? And that's the value of the Squawk right there, is that it's faster than the news feed. Now, obviously, he can't squawk everything. He only squawks the headlines that he deems most important or most likely to move a stock. But there's the value of the squawk right there. Is it beats the newsfeed just because speaking is faster than typing. There's the headline, just came in. So Ruth gave some strong sales numbers for April. Up 2% versus 29. That actually seems a little bit low to me. I would have assumed oh no, but here's May. Look at May. Up 6% versus 2019. That seems more like it. There's the value of the squawk right there. Can we bring Charlie to the show? No, we can't. I have tried many times to get Charles to come on this show or any other show. That is not Charles' style. Charles, frankly, he can't because he's busy, right, doing his job. But also that's not his style. He respectfully declines to come on our shows, and so I don't blame him. The guy is up at 5 a.m. every day and squawking. But no, I would love to get Charles on the show. Charles, if you're listening, which you might be, please come on, man. I've asked you many times over the years, but he doesn't want to. He doesn't want to. So that's his prerogative. What else? Oh, that's hilarious. Thanks for telling me that, Quebec. I think someone, I think Luke did that, I bet. You can change other people's names. I guess my name was spelled wrong. Thanks for the awareness. Funny stuff. No, he's a busy guy, WK Harris. He's a busy guy. He's doing his job right now. He's kind of working, but doesn't want to come on the show, which is fine. The only one to hear Charles is in the squawk. He's in Benzinga Pro, and in Thinkorswim. If you have TOS, he's also in there. Part of the mystery, the allure of Benzinga Charlie, right? All right, 9:22. That's going to be a wrap for me here. Everyone, as always, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to our guest today, Dave Lauer. Got a lot of great feedback in the chat. If you like the interview, tell us. Shoot us an email. shows@benzinga.com. If you liked it or if you hated it, if you have any feedback at all, we are game to hear it. It's on the screen right there. shows@benzinga.com. Tell us who you want us to get. We do our best to not only respond, but also to reach out to people who our chat and who our viewers suggest we reach out to. So if there's somebody else like Dave, some other market structure-y guy, former trader, former high frequency trader, whatever, let us know. Shows@benzinga.com. You can tweet at us, but shows@benzinga.com is probably the best way to get feedback directly to the team that goes to all the producers and hosts here at Benzinga. Again, Benzinga Pro, free 2-week trial, YouTube 20, we get you 20% off. If you are or if you have your own platform, you want to become an affiliate of Benzinga, you can do that. You can get paid for sending new subscribers to Benzinga. Get 30% on every new subscription you send our way. The link is at the bottom of the screen there. It's benzinga.partnerstack.com to become a Benzinga Pro affiliate. David Green is up next. He is, of course, from Wall Street Global Trading Academy. This video will redirect to that, so you shouldn't have to do anything. You should just be able to stay tuned and watch David live trade the open. That's going to be a wrap for me. Everyone, good luck today. I will see you a little bit later. David Green from Wall Street Global Trading Academy is up right now.